Every insurance policy you have comes with a declarations page. It's usually one of the first pages in the packet, and it's the page that summarizes what you actually bought. And most people have never read it. That is a problem because the declarations page is where the numbers are. Your limits, your deductibles, your premium, your endorsements. If a deductible changed, this is where you see it. If a coverage is missing, this is where you catch it. If the wrong mortgage company, vehicle, or address is listed, this is usually where the problem shows up first. Today, we're going to walk you through a sample declarations page section by section so that by the end of this video, you can pick up yours and actually understand what you're looking at. If you don't know who I am, my name is Jim Eddington, and my agency helps individuals and businesses with their insurance every single day. We handle hundreds and hundreds of renewals every month across personal and commercial lines, and the declarations page is the first thing we check when a policy renews. If something changed, this is where it shows up. The declarations page is a summary of your insurance contract. It's not the full policy. The full policy is the stack of pages behind it with all the terms, conditions, and exclusions. The declarations page is the cover sheet that puts your specific numbers in one place. You'll hear people call it the deck page. That's the same thing. Almost every personal and commercial policy has some version of one. Homeowners, auto, renters, commercial, umbrella. The layout changes a little from carrier to carrier, but the sections are the same. Once you know how to read one, you can read any of them. One of the first sections on most declarations pages is the policy information block. This is the header. It tells you who the carrier is, your policy number, and your policy period. The policy period is 2 dates, a start date and an end date. For most homeowners policies, that is 12 months. For a lot of auto policies, it's 6 months. That matters because everything on this page applies only during that window. If you're looking at a deck page from last year, you're looking at old information. You'll also see the policy form listed here. On a homeowner's policy, one of the most common forms is an HO3, the special form. That tells you what type of coverage structure you have. HO3 covers your dwelling on an open peril basis, which means everything is covered unless the policy specifically excludes it. Your personal property under an HO3 is covered on a named peril basis, which means it's only covered for the specific causes of loss the policy lists. Next, you're going to see who is listed on the policy. The named insured is the person or people the policy belongs to. If you and your spouse are both on the same policy, both names should be here. If only one name is listed, the other person may still have some protection depending on how the policy defines an insured, but they may not have the same rights as a named insured when it comes to policy changes, notices, and claim payments. That is worth checking. Below that is the property address. If you have a mailing address that is different from the property, make sure the right address is tied to the right location. We've seen policies where the property location was listed as an old address after a rewrite to a new carrier. That creates problems. If there's a mortgage on the property, you're going to see the mortgage company listed here as the mortgagee or loss payee. The carrier has to notify them if the policy lapses or cancels, and in many dwelling claims, especially larger ones, the mortgage company may be included on the claim payment because they have a financial interest in the property. If you've paid off the house and the lender is still listed, your agent can have that removed. This next one is the section most people skip and is the most important part of the page. The coverage table lays out exactly what limits you have on each part of the policy. On a homeowner's policy, you'll see coverage A through coverage F. Each one protects something different. Coverage A is your dwelling. That is the coverage of the house itself. The number here should reflect what it would cost to rebuild the home from the ground up, not what you paid for it, and not what it would sell for. Replacement cost and market value are two different things. If coverage A is too low, you're underinsured, and in a total loss, you may not have enough to rebuild. Coverage B is other structures. That's your detached garage, your fence, your shed, and other detached structures, depending on how they're used. It's usually set as a percentage of coverage A. If your deck page says 10%, and coverage A is $485,000, you have $48,500 for other structures. Coverage C is personal property. That's most of your personal belongings, furniture, electronics, clothing, kitchen equipment, and the things you'd take with you if you moved. This is also usually a percentage of coverage A. 50% is common. If you have high value items like jewelry, art, or collectibles, the standard coverage C limit or the special limits inside the policy may not be enough. And that's where a scheduled personal property endorsement comes in. Coverage D is loss of use. If your home is unlivable after a covered loss and you have to stay somewhere else, this covers those additional living expenses. That can include hotel stays, temporary housing, and the extra cost of meals and other expenses above what you would normally spend. It's usually a percentage of coverage A as well. Coverage E is personal liability. If someone claims you caused bodily injury or property damage, that is the coverage that responds, whether the incident happens at your home or in many cases away from your home. A guest trips on your porch steps, your dog bites a neighbor, a kid gets hurt on your trampoline. The default on a lot of policies is $100,000 or $300,000. $300,000 may be a reasonable starting point, but if you have assets to protect, you should be looking at higher limits and probably an umbrella policy on top. Coverage F is medical payments to others. This is a smaller limit, usually $1,000 to $5,000. It covers minor medical expenses for someone else in certain coverage situations, often without having to prove fault. It's not the same thing as personal liability. It's more of a goodwill coverage designed to handle small medical bills without having to prove negligence. Below the coverage table, you're going to find your deductibles. The deductible is the part of a covered loss that comes out of your pocket. In many claims, the carrier simply subtracts it from the claim payment. Many homeowners' policies have more than one deductible listed. One is your all other perils deductible, sometimes called AOP. That is the standard deductible that applies to most claims. You may also see a separate wind and hail deductible, which is common in some states and with some carriers. You might have a $2,500 AOP deductible and a $5,000 wind and hail deductible on the same policy. If you file a wind claim, the higher number applies. Some policies also have a separate earthquake or hurricane deductible depending on where you live and what coverages you've added. Those can be a flat dollar amount or a percentage of coverage A, and a percentage deductible on a $500,000 home is a big number. The deductible section is one of the first things we look at during a renewal review. If the carrier bumped your deductible from $1,000 to $2,500, that shows up here. If you don't read the deck page, you find out the hard way when you file a claim. After the main coverages and deductibles, you're going to see a section listing your endorsements. Endorsements are add-ons that modify the base policy. They can add coverage, remove it, or change how a specific coverage works. Common endorsements on a homeowner's policy include water backup that the base policy excludes, scheduled personal property for specific high-value items like jewelry at their appraised value, and equipment breakdown for mechanical and electrical failures that a standard policy doesn't cover. Many endorsements have their own limit and their own premium. You can see exactly what you're paying for each one. If there's an endorsement on the list you don't recognize, ask your agent what it does. And if there's one missing that you expected to have, that's a conversation worth having before you need it. The bottom of the deck page breaks down how your total premium adds up. This is where the math lives. You'll see the base policy premium, the endorsement costs, any discounts, and any fees or surcharges. The discounts section is worth reading. Multi-policy discounts, claims-free discounts, protective device credits for things like a monitored alarm system. If any of those fell off at renewal, this is where you're going to see it. If your premium went up and you don't know why, this section may help you figure out where the change came from. Maybe the base rate increased, the endorsement cost could have gone up, a discount might have disappeared. It may not explain every rating factor, but it gives you a starting point for the conversation with your agent. Auto declarations pages follow the same structure, but the coverages are different. Instead of dwelling and personal property, you'll see liability limits, uninsured and underinsured motorist coverage, comprehensive, collision, and medical payments. Each vehicle on the policy gets its own line with its own coverages and deductibles. Check that the right vehicles are listed. We've seen renewals where a vehicle that was sold months ago is still on the policy and the client is paying for it. Same thing when you add a car. As a general rule, if a vehicle is not on the deck page, don't assume it's on the policy. There may be temporary rules for newly acquired vehicles, but that's not something you want to guess about after an accident. So here's the practical takeaway. Every time you get a renewal packet or a new policy, pull out the declarations page and spend 5 minutes reading it. Check the coverage limits, check the deductibles, look at the endorsements, look at the premium breakdown. If something changed and you don't know why, call your agent. If you're working with an independent agent, we do this review for you at renewal. But you should still read your own deck page because nobody knows your situation better than you do. You know if you finished the addition on the house. Maybe you bought jewelry that needs to be scheduled. The mortgage might be paid off. Those changes need to make it onto the deck page, and nobody is going to catch them if you don't bring them up. If you want somebody to walk through your declarations page, click the link below. We're licensed in Nevada, Arizona, Utah, and California for property and casualty, and we write life insurance in most states. Subscribe to the channel. We publish most business days, and what we cover is for individuals, families, and business owners who want to understand their insurance before they need it, not after. Thanks for watching.